Hello, my favorite 4 subscribers and other 8 to 10 people who are watching these videos. My name is Anatoly, and I'm back with another video about simple personal finance.
Short interest in GameStop.
This GameStop situation is the craziest I think I've ever seen.
We have some breaking news right now on what has turned into the soap opera and saga of the markets right now, and that is the story of GameStop.
Frenzy of the last week around the exponential growth of the GameStop stock taught people all these new fancy financial terms like short squeeze, short sell, float. The words that are in normal life taken out of context really don't make much sense. After the news broke that the stock of GameStop has literally taken off to the moon to find Elon Musk's Tesla that's currently orbiting the Earth, many people actually did or thought about jumping on the bandwagon to capitalize on this explosive growth. People are feeling enlightened. They have finally learned how to crack the code, and they're looking for more stocks similar to GameStop in order to replicate this perfect storm. And all of this is fueled by the simple hope to make easy money. Easy money that always seems so close, but somehow you cannot ever get to it. And you just keep wondering, why wasn't this me who noticed Bitcoin 8 years ago, or housing bubble of 2006, or why didn't I buy Tesla 2 years ago before it exploded? Yeah, I guess exploding Tesla might be misinterpreted a little bit. But in reality, chasing these big market events is not as easy as it seems. The risks are very high. It's so much easier to lose money than to make anything on it. And I have my own personal story to tell about the time when I made a stupid financial decision driven purely by a naive belief that I knew exactly what was going to happen in the future. So last year, right around middle of March, maybe the end of February, the whole world started to realize that the coronavirus is turning into a global pandemic. Hundreds of millions of people will have to be forced to shelter in place. The whole economy was coming to a grinding halt. Understandably, stock market freaked out. Dow Jones lost 26% of its value in just 4 days, and it looked like the world is just falling apart. And of course, I, as a savvy investor, decided that the time of volatility is the time when big bucks are made. So I took that rock and threw it at the sinking ship of an American economy, and I bet my money against the stock market. So I put $1,000. Thank God my risk tolerance level was somewhat adequate, and I didn't bet my entire savings on it. But still, I put $1,000 into STS ETF, which is a double inverse of S&P. This is the fund that's structured in a way that allows you to bet double in the fact that you bet that the market will go down. So let's say the market goes down by 100 points, the fund will actually go up by an equivalent of 200 points. So you're essentially doubling your profits. But of course, this comes with a little tiny problem, little caveat. The caveat is that if the market goes down, you make the double. What if, on the other hand, market will go up? And the answer is yes, you're gonna be losing twice as much. So I bought $1,000 worth of this magic stuff on February 27th, right before 3 major crashes that happened in March. And in the beginning, I was riding the wave. I was feeling like that guy from the Big Short movie. I was thinking that I'm gonna be able to turn this $1,000 into a fortune. Yeah, in the beginning, my bold investment grew to $1,213, so that's 21% return in just 24 days. And when this happens, you get this dollar signs popping up in your eyes, and you're just thinking that you should go and put all the money you have into this beautiful magical stuff that's gonna keep generating you infinite amount of money. But good thing I didn't throw more money into this, because literally the next day my $1,200 dropped to $990, so I was already in the red, and it just kept falling down from there, and I was just sitting there frozen, waiting for something to happen. I didn't want to touch this. I believed that it's gonna go back up. I just needed a little more time. And by beginning of June, out of $1,000 I invested, there were only about $500 left. And I decided that it was finally time to cut the losses and exit out of the position. Otto von Bismarck said more than 100 years ago that only the fool learns from his own mistakes. The wise man learns from mistakes of others. And hey, I totally agree with him. I don't deny being a fool in this situation. I take 100% of the blame. I wish I could have learned from mistakes of others, but I didn't. But at least I'm very grateful that this situation has taught me a lot of lessons that I'm still reflecting on today, thinking what exactly happened and why it happened this way. And I come to very simple, straightforward, common sense conclusions that are so easy to understand. But when you are in the moment and you get these dollar signs in your eyes, your brain, your mind gets clouded and you're not thinking straight and you're just making this very stupid, irrational decision. So here are these things that everybody should always remember. High returns always mean higher risk, and these higher risks can quickly turn into deep negative returns. Many financial decisions people make are completely irrational, and only behavioral science can help me, for example, understand why I didn't close out of this position, why I kept going, even though I totally knew that I'm gonna keep losing money. More than half of active money managers do not consistently beat the market, and these are the people who have spent their entire careers managing money for other people, promising them to make more returns than the market does. And how could I think that I can beat the market? The market totally beat me. Thing number 4, if you ever hear about this new trend that everybody's talking about, the new investing strategy or the new stock that is exploding, just stop and think twice. It's probably already too late to capitalize on this knowledge. That's because the big players with big money have already acted on this knowledge and pretty much have captured the profit, the inefficiency that there has been. So the market has corrected this inefficiency, it has corrected itself, even though it has been only maybe an hour or two. It's already too late. The only way how to consistently win in this game is not by trying to chase short-term gains or trying to figure out how to become rich overnight. No, this is not investing. This is pure speculative gambling. Instead, investing should be investing in the long run in a very well diversified portfolio that will help you smooth out these edges, shocks, ups and downs that occur as a result of the events in the short run. This portfolio will bring you a more stable, much more predictable return, and then the power of compounding will do its magic that will make you rich. I think in my situation, also having a master's degree in finance have helped to fuel this bias that I know more than I actually do. And the matter of the fact is that even most seasoned professionals don't know anything about what's gonna happen in the future. If they knew, they would all be billionaires by now. And this is something that I always try to remember when I think that I have $1 million idea how to quickly make a lot of profit in the stock market. Investing is more than anything a game of patience, perseverance, and sticking to your strategy. And that's what I'm going to be doing, instead of trying to speculate and guess which stock is going to be the next GameStop. And this is it for today. Thank you so much for watching, guys. Please like this video, subscribe, hit the bell notification icon. I'll see you guys next week.